This is the Uptick Network Stock Day Podcast, sponsored by InvestorsHangout.com. Penny stock news and interviews from the microcap world. Public information on OTC, pink sheets, and microcap stocks from around the world. With your host, Everett Jolly.
On today's show, we have a very exciting guest with us. I'm excited to have him on here. His name is Jeff Holtmeier. He is the CEO and chairman of HealthWarehouse.com. Well, they trade on the OTCQB under the ticker symbol HEWA. HealthWarehouse.com. Well, they're a credit pharmacy based in Florence, Kentucky. They're licensed in all 50 states to sell prescriptions, and also in the District of Columbia. Jeff, welcome to the show.
Thank you very much for having me.
You know, I'm really excited to have you on the show for many reasons. One, let's talk about your revenues. You came out with your third quarter earnings report, I think not too long ago. You guys were up 60.8% over 2015, and I think the revenues were around 2.7. How did you guys do that?
Well, as in any successful business, there's always, good hard work, strategy, great people, and then this thing called luck and timing. We were the beneficiary of a terrific story put out by the Independent Consumer Reports magazine, which showed that, the comparison between, say, the Walgreens of the world, the CVSs of the world, the Costco's of the world, and 4 or 5 other resellers of pharmaceutical products. Health Warehouse was far and away the lowest price provider amongst all of them. They took 5 commonly sold drugs and compared prices to all of them independently. And prices ranged from as high as, I think, near $600 for the 5 down to $83 from HealthWarehouse.com.
Wow.
So that certainly was a tremendous lift for us. And, of course, you can't buy that advertising. It's Consumer Reports being an independent research organization. That just happened to fall in our lap, which was terrific. Now, I also would say as well that there's somewhat of a shift, I believe, in the behavior of some consumers in the marketplace. They're becoming smarter. Most of the insurance companies have high deductible plans, and a lot of consumers are going that route, which means they have to purchase their prescriptions by themselves, cash out of pocket. And that's the market that we're in. We do not adjudicate any insurance claims. We're purely cash market. And they are getting smart enough to use the internet to search and find the lowest price for their drugs online. And we typically are, in fact, that low-cost provider. And with the value that we can deliver to our customers of, getting their product out the door within 24 hours and then shipped out to them within a couple of days, however they choose to have it shipped, it's the same model as you would think of. Why would you, use a travel agent today when you can book yourself online? It's the same theory as maybe changing behavior of customers rather than getting in your car, driving to a pharmacy, waiting in line, trying to see how much it's going to cost before they check your insurance plan and everything else, and then come back and buy other stuff in the Walgreens or CVS stores and get back in your car and leave. You point and click, you buy, it's on your door in a couple of days.
Absolutely. HealthWarehouse.com, you guys got some new leadership, including yourself. Tell us about your 4 new board members.
Yes. Actually, we saw this opportunity earlier in the year as a company that was positioned right within the industry and just wasn't, in our opinion, being operated properly.
Absolutely.
So a group of us shareholders got together and had a proxy battle, and we ousted the majority of the board, 4 of the 5 directors, and inserted some new leadership at the board level and new management as well on the operating level. And I was asked to take the CEO position, which I've done, and we have assembled a great management team here. And there was a terrific core group of managers inside the company that really just needed some attention and some leadership, which we've now provided, and changed the culture and really turned the company around in a few short months. And we're quite optimistic about the future of the business because of mainly macroeconomic conditions, as I see it within the industry, are going to start making customers become more aware that you don't just buy a prescription the way you always did, like mom and grandma and everybody else did. There's other alternatives by which to get your prescriptions at a much lower price. 88% of all prescriptions filled these days are generic. That is way up from just even a few years ago. And as you know, generic prices are significantly lower than brand, and the majority of our sales are in generics, although we also do sell brand and we sell OTC products to complement that as well. And we see really the opportunity to continue to grow this model as forces change in the insurance industry and the retailing industry. Consolidation continues. The wholesale distribution channel continues to consolidate. We just are very, very optimistic that over the next couple of years, this company could grow quite substantially and be, if not one of the largest players in it, the largest player in the marketplace.
Well, I concur with you with those statements. My guest today is Jeff Holtmeier. He is the CEO and chairman of HealthWarehouse.com. They trade on the OTCQB under the ticker symbol HEWA. There are so many pharmaceutical companies out there that are publicly traded. What makes your company such a good investment? And we're talking about, you guys are in a market space, and correct me if I'm wrong, for the pharmacy market's billions of dollars. This is a $1 billion industry.
At the retail end, the estimated market size for pharmaceutical drugs sold in the United States is somewhere in the 450 B as in billion per year.
That's incredible.
Out of that, where our market is focused, the nearest estimations that I've seen, which is 2015 data, was 80 billion of that 450 is cash market. And that continues to grow. And again, a couple of examples for your listeners. If you are on an insurance plan that has a copay that costs you $40 or $50 and you can buy the same drug for $12, what would you do? You'd probably buy it for $12.
Absolutely.
Okay. If you can purchase a health insurance plan that says you take care of your own drugs and you're a healthy family, healthy person, whatever, and on occasion if you need a prescription for something, why pay the extra premium when you could go online and buy, something that you may need for $10, $12 on a one-off? Again, maintenance drugs are very popular here at HealthWarehouse.com. 30, 60, 90-day supplies are extremely low price, and it's a convenience factor as well. I mean, I think some people prefer to point and click and have things delivered, but there still is a behavior mindset within most people in the United States. It's just it's a mindset that, oh, my doctor sent a prescription to my corner pharmacy, I got to get in the car, go drive there and wait for it. We're hoping to change that.
Hey, Jeff, let me ask you this. The revenues that's been coming in, especially the third quarter revenues, that's all domestic. There's no international revenues, or correct me if I'm wrong.
It's a good question. No, in fact, there are regulations that we're not allowed to ship outside of the continental United States. And conversely, the Department of Justice actually fined Google 3 or 4 years ago about $550 million, for accepting advertisements from any online pharmacist outside of the continental United States. So all the Canadian pharmacies have been basically shut down, and all the ones in the offshore islands have been shut down. So when we look at the market opportunity and the opportunity for this company, where there is one company in the United States that is authorized and licensed and VIP certified, which is very important, in all 50 states, it's this company sitting down in Florence, Kentucky, which, by the way, is you can call it Greater Cincinnati area. So if you're looking on a map, so we're quite excited about the opportunity to continue to grow the business, with new management, and we're also, another strategy that we have internally here, which will play out over a longer period of time, is to really try to flatten the channel. And for your listeners, that means today in this pharmaceutical world, if I drew you a map and showed you how many people touch that pill before it gets into the hands of the consumer, you'd scratch your head. And it goes something like this. Pick a manufacturer such as, say, name one, Teva. If they have a generic manufacturer for them, they don't make it. They outsource it to an Indian firm, which 75% of all generic drugs are made in India in FDA-approved plants. The Indian manufacturer sends it back to Teva, who sends it to Amerisource or Cardinal, Health or one of the big wholesalers.
Right.
The big wholesalers then they'll ship it down to a sub-wholesaler who can sell it to a retailer who can sell it to the end customer, and everybody's making nice, fat, healthy profits all along the line. There's no need for that in this day of e-commerce. We intend over time to help flatten that channel and go directly to these manufacturers and offer them the ability to sell directly to the end customer and cut out significant portions of cost that really the consumer is bearing.
And maybe fatten their margins too, would make it worthwhile for them?
Yes, and for them to deal directly with through us to the customer, as I understand from many of them we've spoken with, is that it's much less painful than dealing with, say, the major retailers who really put a chokehold on them, and they're quite difficult to deal with, and they reverse auction pricing and short dating and opportunities to send product back. They're very, very difficult to work with, and they prefer to figure out an alternate channel to get directly to the customer. Now, insurance companies have a say in that too. I mean, insurance companies drive a lot of the business in the states, as you know, and when a Walgreens or a CVS sells you a prescription for X amount, whatever that dollar amount is, they're establishing their reimbursement rate. So one of the other benefits to Health Warehouse is us as a cash provider. If Walgreens lowered the price from, say, a drug from 50 to 10 one time, they've established a reimbursement rate across the board for their insurance reimbursements. And they don't want to do that. That eats into their profit margin quite dramatically. We're not bound by that. So customers could go into Walgreens with their prescription and hand it to the pharmacist while he checks their insurance claim, and they can go online on our mobile app and check to see what our price is and say, thanks very much, I'll leave.
Exactly. I bring a lot of CEOs on my show every month, hundreds of CEOs. And one of the most devastating thing when investors get into a company and get ready to buy their stock, they find out that they have a lot of toxic debt. That's not the case with you guys. You guys are well positioned. You don't have a lot of toxic debt.
Our balance sheet needs to some attention. This was a startup company probably 7 years ago. It's been through a number of iterations, ending up on the OTC market from a private company at one point to a reverse merger. And yeah, I mean, as any startup in a new industry, and there's some overhang of some past sins, but we are addressing that, and the board has committed to, properly finance the business and make sure we have enough runway to grow the business as well as take care of any debts that we have incurred, especially from even the previous regime.
Yeah, I would say you guys are off to a great start. My guest is Jeff Holtmeier. He is the CEO and chairman of HealthWarehouse.com. They trade on the OTCQB under the ticker symbol HEWA. In closing here, Jeff, is there anything you would like to get out to the listeners that we didn't get a chance to talk about?
No, I just want to thank you for the opportunity. I appreciate your time, and this will be an exciting industry over the next few years for certain.
Well, we're going to be checking back with you in a couple of months to see how things are growing. I think you guys are doing a fine job, and keep up the good work.
Thanks so much for your time.
The following program is entirely sponsored and produced by Uptick Newswire LLC, which is responsible for the following content. The opinions and information provided on today's show are those of the guests and of those of the respective companies they represent, and does not necessarily reflect those of the staff or management of this station. Uptick Network encourages all listeners of the show to do their own due diligence and research when determining investment strategies that'll work for them, or to seek the assistance of an investment professional. The guests of today's show may have paid to appear on the show and are not directly affiliated with Uptick Network